Welcome to Killick & Co.'s podcast on March the 18th. We start today with quite a lively stock market. It's driven by news over the weekend of the bailout in Cyprus, the proposal to tax depositors, particularly smaller depositors in Cyprus, has caused shockwaves across markets. The feeling, however, is that that deal may well be watered down. Already we're starting to get indications on Monday morning that the emphasis will be on larger deposits, certainly those over €500,000. But nevertheless, this area, which up until now has been treated as sacrosanct, is being questioned, and of course any moves to tax deposits in some of these banking institutions. The worry, of course, is the contagion effect. Will this spread to other deposits in other European countries, particularly those of the weaker banks? So far, the markets, as I say, after a sort of thinking of a 2% fall, seem to be trading around 1%. So it feels a little bit more sort of comfortable than early indications. We are seeing the euro weaken a little bit as well, but nothing more than a drama. I certainly wouldn't suggest that we're at a crisis stage this week. So let's turn to other business, and this is the week ahead chart. Really, things that I would highlight: on Tuesday we have results out from Sainsbury, and now at the weekend we did hear or see a newspaper article in the Sunday Times that the QIA, the Qatar Investment Authority, were potentially looking at Marks and Spencer for a bid. They already own 26% of Sainsbury. That story's been denied by the QIA regarding their interest in Marks and Spencer, although the shares are still holding a useful premium against a weak market elsewhere. So Sainsbury, a little bit in the spotlight for Tuesday. Just from the trading point of view, they had a generally poor Christmas. Tesco was the clear winner over Christmas, so the hope is that trading in the first quarter of the year has at least improved. Wednesday, it's the budget, and already the newspapers of the weekend getting the bad news out of the way. We are clearly, in light of the data points that we saw in the first part of this year, for the UK economy has been poor, and therefore guidance is being reduced. So some of those numbers are already being filtered through into the UK press over the weekend. Otherwise, from the reports season, we do have results out this week from Nike and United Utilities, two stocks that we are following. In terms of some of the sort of interesting charts, I want to start with what is an unusual chart, but one that is, I think, increasingly more important to UK investors, savers, consumers. This is the UK 10-year break-even chart, and what this is telling you is the indications for inflation resurfacing back into the UK. So this is where the smart money is trading and giving sort of predictions of inflation. And as one can see from this chart, we're up at levels with showing around 3.3% on the chart. Now this is the highest level that we've seen since 2007, 2008. So inflation worries are beginning to surface through this chart, and obviously that's coming with a backdrop of very weak growth and a weak currency, which is importing inflation in the near term. So as I say, that is just one chart to keep an eye on, and one certainly George Osborne will have to possibly give some focus to in the course of his budget on Wednesday. So let's turn to some of the stocks that are moving. We were very pleased with Prudential last week. Prudential is showing really a clean pair of heels compared to the rest of the sector. Royal Sun Alliance and Aviva, both of those companies cutting dividends. Will Pru, being much more Asian focused, is beginning to take cash back in from those Asian companies that it owns. Up until now it's been a heavy investor in that particular part of the region, but it looks now that dividends for Prudential are going to be rising, and rising quite strongly. Certainly they have surplus capacity there, enough to start reducing the dividend cover, and that caused that share to spike quite hard on towards the end of the last week. Just put that into context, we are now nudging all-time highs for Prudential, and that really is a big relative outperformance compared to the sector. This is the chart of Marks and Spencer, really just highlighting the bid talks, taking it back up to that top end of the range. The bid number that was being rumoured in the Sunday Times was 500 pence a share. The share's trading at 400. They drifted off to around 385 in recent trading, but still holding a decent premium. I think the feeling is that whilst a bid may not surface for Marks and Spencer, particularly at this juncture, the new management team only really have until autumn to show that the clothing side of the business is working well, and if it isn't, then clearly they will be very vulnerable to a potential bid from somewhere else. In terms of currencies, the euro is weakening in light of this Cyprus deal over the weekend. It's continuing a recent trend that we've seen that saw the euro at the start of 2013 rise very strongly against the dollar as risk on appetite was in markets, and we saw it up to about 136. We're now dipping down to around 129. So in fairness, that is probably quite healthy for Europe, and the strong currency was beginning to cause concerns about its position, competitive position with such a strong currency. This is the Spanish 10-year yields. We're keeping an eye on this just really as a risk barometer for the Cyprus situation. If that contagion story from Cyprus to some of the weaker European economies were to take hold, then of course we will be looking at the 10-year Spanish yield as being a room for potentially that to be manifest itself. So we have seen a spike up in yields, but in fairness, that spike up in yields is probably not as much as we saw when we saw the Italian election problems just a few weeks back. In terms of the pound, well, the pound has had a bit of a bounce in the course of the last week. It's been in a very, very strong downtrend now that has been persisting through the course of this year. We saw a break to the reversal on that trend. Obviously this week is going to be pretty important. We'll also have Bank of England minutes on Wednesday, and you may recall that last time three members of the 9 team voted in favour of more QE. They held that decision again for the following month, but the question mark is whether it's still 6-3 or whether it's much closer now at 5-4. If it moves to 5-4, potentially then we may see further movement in the currency. Finally, FTSE 100, well, it's been up at 6,500. This Cyprus news has taken the top off that momentum. Really, I think by the end of this week, if we've recovered our poise, then that will continue to remain an encouraging trend for the equity market. And so it's going to be an interesting week. We'll learn a little bit more about the sentiment that underlies these very strong markets we've seen so far.